can hear me all right. Want to make sure you guys can hear me and I'm not talking into a void. Oh, yeah. We are good. Perfect. Well, what's up, guys? Happy to be here with y'all. Just gonna wait. We usually wait about 3 minutes for people to roll in. I'm just pulling up my notes for this evening. By the way, how lovely that we're here in the evening and not in the morning, because every class I do is usually in the morning. So the fact that we're here in the evening is quite nice. Very exciting stuff. Happy to be here. While we're waiting again for the next 2 minutes, as people start piling in here, why don't you drop into the chat where you're tuning in from? Would love to know what state, what city, where you guys tuning in from. All right, we got Arizona, Utah, California, Florida, Alaska, Dallas, Illinois, Vancouver, Canada. Let's go. Lived there for almost 3 years. Yes, you will be able to watch it again. Montana, Ogden, Louisiana. There we go. North Carolina. I was golfing today, actually. LA, Idaho Falls, Erton, Cody, Wyoming, New Jersey. We're coast to coast, baby. Love to see it. Amazing. So many Eagle Mountain, someone in my backyard here. Here we go. South Lake Tahoe. I spend my summers in Truckee. Go Utes, baby. We've got a chance. Awesome. Well, welcome in, guys. Happy to have you here. This is exciting. We don't always do evening sessions like this, and we definitely don't always do free sessions. So really excited for you guys to be here with me, and I'm excited to be here with you. So very, very happy to be here. Jersey, Georgia, Layton. I love it. Thanks for letting me know where you guys are coming in from. It's always fun to see just how much of a reach Uncommon has, and it really is a unifying skill set. I always tell people, it doesn't care who you are, where you're from, your background. Day trading is for everyone. Texas Beach. There we go. All right, guys. Well, we're 3 minutes in, so we're gonna go ahead and get started. Thanks for being here. I know you guys are taking time out of your day to be here, and so I appreciate it. Obviously means a lot for me to have you guys here, and I want to give you the best I've got over this next hour or so. So really excited to be here and hopefully provide you guys with some valuable information. I think you guys are going to be pretty excited with what we have going on here. So to start, I want to welcome you guys again. My name is Jeremy Lieber. I am the founder of Uncommon Education Trading. I've been trading for just about 9 years now, which is wild to think, almost a decade into this crazy game of the stock market. Uncommon's been around for 4.5, almost 5 years now. We've had thousands of students come through our program. Upcoming, we have our 14th Mastermind, which is so cool to see, such a culmination of everything we teach here at UET. And we have, a couple thousand members in our community now, which starting out by screen recording videos, because I had friends, curious in what I was doing. They wanted to know, so I would screen record videos and send these videos to them and have them Venmo me. That's how Uncommon started. And I had no intention of starting Uncommon Education, just kind of flourished and naturally grew into what it is today. And again, a lot of that is thanks to you guys, so really appreciate you guys being here. It's been a lot of fun. What a ride. And we're not done yet. We're actually, we're just getting started. We're getting better and better every single day. So I live in Utah. I grew up in Farmington, Utah. I spend my summers up in Truckee, as I mentioned before, California. I'm up by Lake Tahoe. I love to golf. I love to fly fish. I spent today golfing. Took my buddies for some money today, which was a lot of fun. Made a clutch birdie putt on 17 at Valley View in Utah, for those who know that course. Made a good birdie there. But man, I love to fly fish. I fly fish a lot and spend a lot of time in the outdoors, camping. Love to hunt small game, travel the world, fly fishing. Most recently was in Argentina, fishing for golden dorado. Coming up here in the next couple months, going to Brazil, fly fishing for arapaima. Anyone knows what that fish is? That's going to be pretty nutso. Might have a steelhead trip at the end of this month. Have a lot of good stuff going on. Winter is actually one of my favorite times to fish because everyone else is inside in the river is for me. Um, Man, what else? Yeah, I love a good drink, a good beverage, morning, evening. I really enjoy smoking meats on my smoker. This weekend I made some ridiculous trout dip. I don't always keep fish, but every once in a while in the winter months, ice fishing or reservoir fishing, I'll keep some. Caught some really good rainbows and cutthroat down in Idaho. Brought them back and yeah, made a delicious smoked trout dip. It's the best time of the year. We had World Series baseball. We've got the NFL going on. We've got. I know I belong in Alaska, Megan. Trust me. I know. I think my heart is always calling there. But enough of that. You guys hopefully know who I am from all our social media. I want to get into teaching you guys what the stock market is, how we trade, how we make money, and hopefully give you some free game that can help better your life and give you your time back, right? That's always what I'm pushing for. And really the goal of Uncommon Education Trading, right? Your traditional schooling is, receive your degree, get your diploma, get your piece of paper, whatever. You're ready for the real world. For me, I'm saying, no, forget that. I want you to be free. I want you to not have to worry about a boss, worry about a schedule, right? Spend as much time with as you can with your young kids as opposed to spending, the entire youth of your kid's life working like a dog just to make ends meet. Like that's what Uncommon's all about, is giving you your time back to spend time with friends, with family, with loved ones, spending time doing what you want, hobbies, traveling, and it's pretty cool. I think what we've done here at Uncommon is in my opinion the right way to teach day trading and the right way to build a community, which is, hey, freedom equals wealth. I don't care how much money you make. If you can't go do what you want when you want with who you want, you're not wealthy, right? If you're having to go in on a call on Christmas Day or on the weekend, like it's, again, doesn't matter how much you make. This will be recorded, so you guys will be able to view this later. Let's go ahead and set some expectations for this class. So number one, the next 3 days is going to be pretty incredible. Obviously, I am going to teach you as fast and as effective and as clear and concise as possible, but I'm teaching you 9 years worth of information in 3 days. So it's not even 3 days, it's really 3 hours. So stay with me. Understand that I want to expound on things. I want to go deeper into the understanding of these things. And I'm going to do a good job of, I believe, teaching it in a way that hopefully makes sense that maybe it hasn't before. But we're doing it in 3 days. So take that with a grain of salt. Understand that, you're not going to be ready to just deploy thousands and thousands of dollars in the market and be ready to rock and roll from these 3 days. But you'll be able to be prepared to start trading and understanding the systems that we use. I'm going to teach you strategies. I'm going to teach you technical analysis, what the stock market even is, the difference between options, futures, equity. We're going to go over all this. And then what's amazing is on Friday, you get to live trade with me. Okay, so within our community of, again, a couple thousand members, every day we are live trading where I share my screen, implement the strategies with real money in real time. You guys get to take part in that on Friday, which is cool. We very rarely let people from the outside come in and see what we're doing here at Uncommon Education. So with that being said, I appreciate you guys being here. Let's go ahead and get into it. Let's get started. We'll record this. We have a little AI companion that takes notes, and we'll shoot you an email with it after as well. If you want to sit back, relax, grab your favorite cold beverage. I've got mine here. Let's go ahead and get started. All right. So the goal of all this is to help you build confidence and understanding in the stock market that hopefully, you didn't have before, that you will have by the end of this. So again, without further ado, we're going to be done by 7 p.m. Mountain Standard Time. I'm very prompt. I'm very concise with my time. Again, I've been doing this a long time, so let's go ahead and get started. And we'll open it up for Q&A towards the end once we kind of go through today's class. So first of all, let's go ahead and talk about what is the stock market. Okay, what is the stock market? It's a good question, and a lot of people, quite honestly, don't know. It's like, yeah, stock market, there's companies, this, that, whatever. So what the stock market is, what I like to describe it as, is it's essentially a marketplace. Okay, so think of Amazon or think of eBay, right? Anywhere where you can go and search up any item that you want and you can purchase it. That's what the stock market is, except you can buy and own shares of companies. Okay, so it's a marketplace for you to buy ownership, small pieces of ownership in companies that you believe in. Okay, so the stock market is full of companies that you probably use on a day-to-day basis, right? Nike is a company that is listed in the stock market, right? That you can trade or buy shares off of. Apple, Tesla, Google, right? All of these big names, even Amazon, right? The stock market is a place where you can buy, again, ownership in these companies, which is what we call, or what is referred to as owning shares in a company. And essentially what they do is they offer a small piece of the company, right? A share in the company. And if the company does well, more people buy shares, the price of the stock of that company increases, right? Where if everyone is selling shares in a company and you own shares in that company, well, the company is going to decrease in value, okay? So that's the best way I describe it, is it's a marketplace for companies, again, for you to kind of choose from. There's so many companies that you can, obviously purchase and take part in the stock market. But that is called owning equity or shares in a company, okay? So again, simply put, let's say you download the Robinhood app. It's a broker app that you can get on your phone, and you're like, I want to buy some shares of Disney because I love Disney and I want to own, some shares of that company. Well, you can go and you can find, the Disney ticker or the Disney, stock, and you can just say, I'm going to buy $5 worth of Disney stock. Great. You can do so. You own that share. Again, it's called a share in the company. And that $5 will increase in value as the stock that you purchased increases in value, or your purchase of that stock will lose value if the stock loses value, okay? So the way that the price moves in the market really comes down to how many people are buying or how many people are selling any given stock, okay? So really, human emotion is what drives the stock market, if you think about it, right? So like, what drives up the price? What, kind of makes the price less? Well, if there's a lot of good news and a lot of optimism and a lot of hype around a stock, well, there's probably going to be a lot of people buying that stock. And the more people buy, the more valuable the stock becomes, and the higher the stock price is going to be. Does that make sense? Now, if there's a company where it's not doing so well, or there's some bad news, CEO scandal, or there's poor, reported earnings, or they're kind of missing the mark as a company, well, then people might start selling their shares in the company, which is going to drive the price down and make your shares in that company not as valuable, okay? So as we can see here, right, on this chart, and again, you don't need to understand what any of this means. I'm actually going to clear this up here just so we can kind of take a peek at this with a little more clarity. But let's use an example, a company that probably all of you know, Microsoft, okay? So as we can see, Microsoft, here's the price action on the day. You can see price started to push up, but ultimately price started right here on the stock of Microsoft at $513 and ended up dropping down to $506 on the day, okay? So price action moves in according to human emotion. Kind of like if you think about, remember in COVID, or even just recently when eggs, the price of eggs was through the roof because there's a supply and demand issue, right? So many people needed eggs and there wasn't enough eggs being made, right? Or the peak COVID insanity was toilet paper. I remember going to Walmart one time and I had run out of toilet paper and I had to get in a line and they were giving out one thing of toilet paper per person. And it was super expensive. What a joke, right? So, but it's the same thing, right? If there's need or demand, it's gonna, drive the price up. If there's not demand or, there's too much supply, it's gonna drive price down, okay? So that is what the stock market is in a nutshell. It's a marketplace for you to buy into companies that you believe in. Now, that is what we refer to and what you'll hear me talk about throughout these next few days as stock equity or shares in a company. Okay, so that is actually you owning those shares. Now, a few things on that note. You can own these shares for as long as you want. So what that means is, let's say you buy $10 worth of Apple today, right? Apple stock. Well, you can hold on to that Apple stock as long as you want, right? Until you decide to sell it or until the company goes bankrupt, right? Company like Apple, way too big to go bankrupt, for the most part, right? So you when you're buying shares or stock equity, you are buying it, holding it, hoping that over time it goes up, and that's a great way to invest, right? But that's not what we do as day traders. It's a little bit different. So now I want to talk about the difference between stock equity or shares, which we just talked about, and hopefully you have an understanding of. And again, side note, I know we're going fast. I would love to sit and elaborate even more, but remember, we only have 3 days, and so we're going to be touching on these things. If you want me to expound further, again, we have different ways to do that, but right now we're going through pretty quickly, okay? So let's talk about stock, equity or shares, stock options, and then futures. Okay. So stocks, as we've just established, is ownership in a company, right? Small percent ownership. You actually own those shares that you purchase, and it's a long-term game, right? You're buying and you're not looking to sell it anytime soon. You're hoping over the long run that it's going to pay out, right? And a lot of the stocks right now that people are buying, long-term, myself included, are stocks like Tesla, Nvidia, AMD, right? Some of these chip processing, AI driven companies that have a lot of runway, right? So that's what stock, equity, or shares are. Now let's talk about options, okay? So stock options are a way for you to actually benefit from stock price movement without actually owning a stock, okay? So to kind of put it plain and simply here, what I like to use as a again analogy, I'm a big analogy user, right? So if buying a stock in a company like Apple is like buying a house, right, where you own the asset, buying an option contract, okay, option, which is what I trade, that's what I day trade. If you buy an option contract, it's like renting that house for a short period of time, but you can potential much faster, right? So if you bought a house, you bought it, and that's compared to stock, equity, or shares, and you're like, cool, for the next 3 years, I believe the price is going to increase by 20%. Well, what options is saying, hey, I'm going to rent this house, right? I'm not going to buy it. I'm going to rent it for a short period of time, and I'm going to try to benefit, 20% over the next, whatever that is, a couple years with stock equity. I'm going to try to make that 20% in a day, right? And so, the breakdown of it is when you buy shares in a company, you own a piece of that company. When you are buying option contracts, okay, it gives you the right to profit from the movement or from the gain of the asset that you're purchasing or that you would be purchasing without actually owning the stock. Okay, so the simplest way to describe it, based on that analogy, is if you buy a share of a company, you can hold on to that forever. When you buy an option contract, okay, there's a few things that make it so you can benefit greater, but you can also be penalized greater with an option contract. Okay, when you buy an option contract, again, it's like renting the house as opposed to buying it. It is going to move very quickly, the movement of the contract that you purchase based on the actual stock's price movement. So let's say Apple as an example. Okay, if Apple's stock price, okay, so if we go to Apple and we see the stock price here, that was we're watching, let's say started down here at 267, goes up to 270. That's about a 1% move on the stock, right? So if you owned a share of Apple here at 267 and you sold it at 270, you'd make $3, right? If you had one whole share, if you bought $267 worth of Apple here, sold it here, you would make $3, right? On a 1% move. Well, with option contracts, that same 1% move is probably going to be more like a 40 to 50% return if you were to buy an option contract. Okay. And the reason that that's the case is when you buy an option contract, again, we don't actually own any shares in that company, but we're saying, hey, we're pretty confident that the price is going to go this way or going to go that way. And so we're going to buy or rent this asset, and it's going to be leverage, which I'll talk about here in a second, because we're confident it's going to go the way we want. So we want to benefit more, right? So again, in this example where you'd make $3, right? Well, if you bought an option contract here, and again, the correct contract for it to go up, this same $3 move by owning a share, you could make, in the example we're talking about here, roughly $130 on that same move. Okay. So if I buy a share here or own a share in the company and sell here, I make $3. If I buy an option contract here and sell here, I make $130, right? So it's a $3 profit versus $130 profit. Now, you might be thinking, okay, that's great. Why wouldn't everyone do that? Well, if we believe the stock's going to go up, and it actually starts going down, and it goes down 1%, well, then yeah, you're holding a long-term share. You're down 1% on your position. No big deal, right? You have $100 in a stock, goes down 1%, you lose $1. Not a big deal. Well, if you put $100 into an option contract and it drops 1%, again, you're going to lose 50% of that contract and value, and you can't hold on to it forever, right? With contracts, they expire. And so not only are we saying, hey, we believe a stock price is going to go a certain direction, but we're saying, hey, I believe it's going to go a certain direction in a specific time frame. Okay. And the way it works, and again, I wish I could describe it, further in detail, but the reason why you can make so much more owning an option contract is the contract that you purchase moves as if you had 100 shares. Okay, so I'm going to say that again. If I purchase an option contract, they discount it for me saying, yeah, you think you're going to be right? You betcha, right? We're going to give you movement as if you had 100 shares, but we're only going to charge you $100. Where normally, right, that would cost me, 100 shares here. What's 100 times 267, right? We pull out our little calculator here. 100 times 267, right? It would actually cost you $26,700 to get the exact same movement as an option contract that only costs you $100. Okay, so that makes sense. So they are saying, cool, we get that you think you're going to be right. We'll allow you to benefit as if you owned 100 shares. You can rent these 100 shares from us for $100, right? But if you're wrong, you're going to suffer as if, you had 100 shares. So that's how it works. And that's how it moves so much more on these gains. So again, in this example, a 1% move, that would roughly get us a 40 to 50% move on the option contracts we purchase. So really what it comes down to is option contracts, you're going to make so much more money if you're right. So you just got to figure out how to be right. And that's what we're going to teach you tomorrow, is the actual strategies, the systems that we look for, our entry criteria to take trades, and how we actually mitigate risk and have proper risk management to, even on days, where we're wrong and it's going against us, we're never risking anything crazy, and, keeping it a very risk management forward trading strategy. Okay. So that's stock options, right? Stock equity, a share, you own the share. Stock options, we're essentially renting 100 shares. They discount the price so we can have access to it, but they make that contract move with the same, pace or volatility as if we had 100 shares. Make sense? That makes sense. The stocks, Kartik, very good question. It's very simple. I have been trading the same 6 stocks for the last 9 years, right? We trade blue chip, big name, high volatility, and large cap stocks, right? Stocks that we just went over. Tesla, Apple, Nvidia, AMD, Google, SPY, and QQQ, right? Big names that move every single day. And, we've become very familiar with their price movement. Okay, so moving forward. Now, we just established what options trading is, right? And that's what I trade. And then within our community, and a lot of people, in the day trading space, trade futures. Okay, so I'm just going to touch on futures for just a moment here. But here's what futures are. So futures are contracts that track major markets. So think of the same way that we're renting, the right to 100 shares of an option as an option contract. Well, when you're trading futures, it's like we're renting, right, the ability to trade, again, kind of a leveraged position against the overall market, right? So the overall market, meaning the S&P 500, right? That's the 500 biggest, cap stocks in the market, or, the NASDAQ, which is a lot of, tech-related stocks and up-and-coming things of that regard. So this is a little bit different, right? Futures trading, because there's different rules and regulations. You're not trading individual companies. You're trading more entire financial sectors, right? Few things that are different with futures is it's not limited to the stock market hours. The stock market hours for options and stock equity or shares is 9:30 a.m. Eastern time until 4 p.m. Eastern time. Futures trading is essentially almost 24/7 trading, which is a good thing in some cases if you can't trade during market hours, or a bad case in some cases if you're someone who overtrades and treats it like a casino, right? It's great for traders who want, consistent volatility, and, you don't have access to capital, because you can trade with what's called a prop firm. Okay, so I'm going to touch on this very, very briefly, right? Very briefly. But what a prop firm is it's essentially ways for you to use capital to trade with, or you to use money to trade with that is not your own. And so the way it works is you pay a monthly fee to have access to an account, right, through a trading prop firm. And they say, cool, use these simulated funds and trade the real market. And if you show good consistency, good risk management and, showing that, hey, you can profit as a trader, then they will actually let you have access to their money to trade. And they keep a small percentage of the profits that you make, right? Most are like an 80-20 split. Some are a 90-10. And again, this is a great way to get involved trading and even trade with large amounts of capital if you are someone who's good at trading but doesn't have a lot of money to your name, right? So again, we have stock equity share. You own a piece of the company, small piece. Stock options, you're essentially renting the right to own 100 shares. And again, with options, there are no prop firms. There's no good ones, at least. But this is a way to, again, be very leveraged and benefit if you know what you're doing and you're very good at identifying setups. And then there's futures trading, which is you can trade with prop firm money or money that's not your own, but their rules are very, very tight, right? And there's a reason these prop firms exist, right? Because most traders are no good and most traders fail. And so they make their money on these monthly recurring charges or the reset fees to have access to these prop firm accounts. I don't want to spend too much time on prop firms, but hopefully you can understand what these things are. PZ, we're going to have a Q&A at the end, and I'll be able to answer that along with any other questions you guys have. But you can start with as little as 500 bucks to trade options. So again, guys, we will have a Q&A at the end. I'm going to rip through this, not trying to be rude. We're trying to essentially condense 9 years worth of knowledge in 3 days, an hour each day. So we're going to keep moving along. Okay, and we will have a chance for Q&A at the end. But we've got that dialed in, right? Stock equity shares, you buy, you hold for long term. You're essentially owning a piece of the company. Options trading, you are buying a contract, which is essentially renting 100 shares at a discount and benefiting or losing as if you had 100 shares. And then there's futures trading, which is you're trading entire financial market or sectors. There's a lot more rules around it, but you have the ability to trade prop firm money if you are consistent and good, which according to data, you do not have in your favor, especially if you are not being trained or have proper training, professional training in regards to understanding market. Okay, that makes sense? Not bad for 25 minutes explaining what the stock market is, stock equity shares, options, futures. Okay, beautiful. Moving on. So why do we trade options and futures, right? Why would we ever trade options and futures as opposed to just buying shares or equity? Well, there's a few things, okay? Number one is that much lower capital is needed. Like I say, we had a student who, credible kid, 22 years old. He started with a $5,000 trading account. When he took our mastermind, he grew it to over $300,000, right? Trading option. Okay. We have so many examples of people who start with 1 to 2,000 that grow it to 10,000, right? You can start with as little as 500 bucks. Okay. So the barrier of entry trading options is so small, right? You can literally start making actual money with as little as $500 when you understand the skill set, the strategies, risk management, everything involved with it. Futures is even a lower barrier of entry, right? Take Profit Trader as an example. That's a prop firm that we recommend and that we like. Use discount code UNCOMMON and it'll give you 40% off anything you purchase from Take Profit Trader. Again, UNCOMMON, Take Profit Trader, 40% off. But again, with our discount code, it's essentially $100 a month to have a crack at one of these evaluation or simulated, accounts. And if you can pass that and become a funded trader, you can start trading with anywhere from 50 all the way up to, $150,000 worth of capital. But again, you have to understand the rules, the regulations, very tight window of, margin of error, very difficult. Even for me as a professional trader trading options, it's difficult, these prop firms, okay? So you don't need a lot of money, right, to trade both options and futures. The ability to trade up and down. And this is one of the most incredible things about futures and options trading, and why when I was learning the skill set in the beginning, it was such a no-brainer to me. Because if we believe a stock is going to go up, like Apple, we can buy a contract for futures or options here that is a long position. In options, it's called purchasing a call contract. Okay, L-L, okay, call contract. And then if we believe a stock is going to go down, okay, so let's say we look at Microsoft and for whatever reason we thought, yeah, Microsoft's going to drop today. You can actually make money when the stock decreases in value. And that's not the case when you own a share of a company. Now remember, when we go back to stock equity or shares, if you were to purchase a share of Microsoft right here and it starts dropping, well, then your share that you purchase is going to be losing value. But if we buy a contract, okay, of options or futures, in options, it's called a put contract, okay? P-U-T, a put contract. That means that as the stock price decreases in value, the option contract that we purchased, if it's a put, will actually increase in value. And I remember when I learned that, that was so great. And it's the same thing in futures. It's not called call and put, it's just called buy and sell. But you can make money when a stock decreases in value. So that right there shows that this skill set is recession proof, it's market proof, it doesn't matter. As long as the stock market exists, which it will always exist, we can make money because we don't care if a stock goes up or if a stock goes down, right? I've been doing this long enough. Pre-COVID, right? Everything going up, up, up. I made a lot of money buying calls as everything went up. Guess what? When COVID happened and all the shutdowns came, what do you think I did? I shorted everything, or I bought put contracts, right? And I made a lot of money as all these stocks were decreasing value and all these people who were owning shares in the company were losing money. Now, post-COVID, I've bought more, right? And we make money as things are going up. And intraday, on the same day, we could buy call contracts right here on Microsoft and sell right here and make money on this move right here, purchasing options or futures, right? Not futures because it's Microsoft, but if it was a ticker in the futures world, which is, the overall market sectors, but we're talking about options right now. If I bought a call contract here, sold right here, I made money as the stock price increased. And then if I said, you know what, now I think it's going to go the other way, I can buy put contracts right here. And if I sold right here, I made money as the stock price goes down. Okay. That is one of the craziest realizations of trading that people don't understand is the market doesn't need to go up. We don't care which way it goes. We just need to be able to identify which way it goes. And how do we identify which way it's going to go? That's what we're talking about tomorrow. Technical analysis, strategies, that's what we're getting at tomorrow. So I'm really excited to get over all that. It is crazy, right? And I think about this all the time, how many people out there trying to teach options or futures or whatever, and people don't even understand this simple fact. Like, it literally blew my mind when I found this out. I'm like, you're telling me I can make money whether stock goes up or goes down. I just have to be able to identify which way. Now, let's just say you take nothing else away from this other than you can make money doing this. COVID. I want a few responses here. When COVID came, the shutdowns happened and they grounded all flights. So they said, hey, planes are not going to be flying anymore. Companies like Delta or Boeing, do you think those stock prices increased when that happened, or do you think they decreased? What do you think happened? Yes, of course, going down. So as soon as you hear that, what do you think I did? Not following any technical analysis rules or whatever. As soon as I heard that, these planes were grounded, I went to Boeing stock, and what do you think I bought? What do you think I bought? Yeah, I bought a bunch of puts, right? And I made a lot of money as the stock price decreased in value, right? Now let's talk about stocks like Pfizer or Moderna, right? These were the jab, the which I don't even know, the vaccine, right? The vaccine. Do you think those companies, as soon as COVID happened, increased in value or decreased? Increased heavily, right? Because again, there's huge demand for it. So what do you think I bought? Calls, right? Which again, so even if you know nothing else and you just are a person in society aware of what's going around you, you can use this knowledge to your benefit. Now, we never just buy or sell based on what we hear in the news or what we see, okay? We can use that as what we call a catalyst or a reason to believe that something's going to happen, but we use the charts and technical analysis to meet our entry criteria, right? It's like saying, if I'm a sniper rifle, right, in the Army, and I'm sitting there and I see my target, right? If I see my target, that's step one. It's like, cool, I need to get ready to shoot, right? Because my target is acquired. But I need to go through my checklist, okay? So what might my checklist be? Well, we need to check the wind. What's the wind looking like, right? We need to check, is there anything obstructing my view? Is there any potential hazards? Like if I miss, or even if I hit my target, is it going to hit someone else or something else, right? How long do I have to take the shot, right? All those factors, that's your entry criteria. So we never just say, oh, Trump said to buy, Tesla stock because of this. And so let's go buy Tesla. It's like, no, okay, there's a potential good catalyst there. Now let's look at the charts, make sure our entry criteria is met from a technical analysis standpoint, which we're going to talk about tomorrow. And then we take a trade based off of that with take profit and risk management parameters. Okay. Last things here of why we trade options and futures, guys, is you're not tied to your position, right? Like, we never hold positions overnight. So what that means is when I'm day trading, if I buy calls on Microsoft, I'm usually selling them within 20 to 30 minutes of me buying them. Sometimes I'm literally selling them within a minute of me buying that position because it moves enough for me to take profit. Where if you buy Nike stock or Disney stock or Apple stock, you're holding it for a long period of time. It's like investing in real estate. Sometimes it's great, long term, all this long term investing, but day trading is a cash forward, cash heavy strategy. And I want to make sure that that's understood. This is a short term, skill based income, right? Like if you make $800 in the market today trading options or futures, it's in your bank account tomorrow. Well, for sure, trading options. Sometimes if you're trading with a prop firm, there can be a whole payout process. Again, that's another story for another day. But it's not like a house where it's like, oh, my house increased by $3,000. So why isn't that money in my bank account, right? You need to do a refinance. You need to do a home equity line of credit. You'd have to do all this stuff, or you'd have to sell the house. With us, nope. You enter, you exit, money's yours. Do with it as you please. Okay. We're not investors, we're operators, right? And I think that's a huge misconception about day trading. Day trading is not investing. Investing is buying shares, long-term strategy. That's investing, right? Well, we're operators, right? We read what's going on in the market and then we execute, right? So it's like, cool. We believe that the stock is going to drop in value because of XYZ. We buy puts. We believe it's going to bounce again right here. That's where we sell, right? And then if we're wrong, we have a built-in stop loss in place where it's like, cool. If we put $100 into a trade, and like we just showed, we're going to be targeting $30, $40, $50, right? On our $100 that we just put into that. That's what we want to make, $30 to $50 if we put $100 into a trade. And if it goes against us and starts going, so maybe we buy calls right here and it starts pushing against us. Well, if we put $100 into that, we might only risk $15 of that 100, right? And again, we're going to talk about this tomorrow, but that's a very good rule of thumb when trading, is that you want your average win to be at least 2 times your average loss, okay? So that way, if you put $100 into a trade, right, and you make $30, you lose 15, you make 50, you lose 15, you make 40, you lose 15. Well, you're very profitable only with a 50% win rate, right? And a 50% win rate is not awesome. Then when you get comfortable trading and you actually understand the entry criteria, the strategies, get comfortable with it, and you're right 6, 7, even 8 times out of 10, well, then guess what? You're able to be really profitable with that same what we call reward to risk ratio. Okay. All right. Let's see what else I want to just touch on here with you guys for just a second. So now that we understand, okay, a very simple understanding of what the stock market is, and I want to make sure to have lots of time for Q&A and go over everything before we kind of set the stage for tomorrow, which we're going to do right now. A few things to keep in mind. Stock market, okay, a marketplace for you to buy companies that you believe in, right? Like Amazon, it's like eBay. You pick and choose what you want. That's what the stock market is. It's a marketplace for companies, and you can invest in those companies, and that's buying shares or equity. Hold on to those forever. If you want to buy options or trade options, right? You're saying, hey, I don't want to actually own the stock. I want to rent 100 of them. I want you to give me a discount, and you can make the movement as if I owned 100 shares. So if I'm wrong, it's going to penalize me more. But if I'm right, it's going to penalize, or it's going to be more of an advantage, right? Again, a a 1% move on that stock on Apple would have been roughly a 40-50% return on option contract. So that's what options are. And then futures is if you're saying, hey, I want to trade an entire sector, like the S&P 500, like the NASDAQ, like gold or oil or whatever the case may be. You can do so, same idea, at a discount, and you can trade with prop firms. Now, again, prop firms, that's the ability to trade with other people's money, but you have to pay a monthly fee to have access to even have the chance to have that money to trade with, and you have to hit metrics and kind of pass their evaluation tests on these simulated accounts which includes hitting a profit target before, a certain amount of drawdown, or before, you lose a certain amount. You have to have it over a certain amount of days, right? There's so many factors that go into that. So that's the difference between those three. Okay. I just went over why options particularly, but why options and futures are so much better to trade than shares in a company, because we're not investing long term. I still invest in shares in company, right? Long term. But trading options or futures, you can make money whether stock goes up or whether stock goes down. So really all you need to know, if you're listening to this, you're like, cool, Jeremy, I get it. I can make money whether stock goes up or down, right? So all you need to figure out and all you need to know is, number one, what contract to actually purchase if you want a stock to go up or a stock to go down, right? And in options, a call contract means you want it to go up. A put contract means you want it to go down. Again, in futures, you just buy if you want to go up, or you sell or short if you want it to go down. So you need to figure out, establish, okay, which contract to purchase. You need to know where to even go to purchase these contracts, which we're going to go over on Friday on our live trading session, which I'm excited about. And then you need to know how to identify which way a stock's going to go. Okay. And this is when I want to set the stage for tomorrow. And I use this a lot in our mastermind calls that we have with people who are interested in my mastermind program. Again, we have one coming up on November 17th. But it's like learning to read sheet music. Does anyone in the chat play the piano and know how to read music? Anyone? Anyone know how to play piano, read music in the chat? Okay, we've got a few. Now, flute, epic, very cool. Raise your hand, or, say me if you don't know how to read music and you don't know how to play the piano. Handful of you that don't know how to? Okay, perfect. So here's the analogy, and this should establish exactly what I'm trying to, get across very, very plain and simply. If I went to any of you, okay, so let's use Tracy. Okay, Tracy, you do not know how to read music or play the piano. That is A-okay, no shame at all. That is A-okay. I just saw your name, so I'm going to use you as an example. I hope that's okay. But if I went, okay, Tracy, here's a grand piano. Sit down, and I put some sheet music in front of you. I'm like, I want you to play something. I want you to play what's in front of you, or something that you know, and make it sound beautiful. Well, Tracy, do you think it's going to sound very good if you start banging those keys? Probably not, right? I'm going to go ahead and go out on a limb here and say probably not, okay? It's going to sound horrible, right? And why is it going to sound bad? Is it because the piano's broken? Tracy says awful. Thanks for being a good sport, Tracy. Is it because the piano is broken? Is it because it's impossible to play something good on the piano? No. You don't know how to read music, which is number one, and you don't know how to execute notes and chords to make it sound good, okay? Now, I do play the piano, right? And a handful of you do. So now let's say I have someone sit down who does know how to play the piano, and I put sheet music in front of them. The same sheet music, the same piano keys, the same piano, they can play beautifully and make it sound so magical and, like heartwarming, whatever. What's the difference, right? The difference is they know how to read music and they know how to execute notes and chords, okay? Now you guys can probably see where I'm going with this. Tracy, right? Being a good sport. Do you have any understanding or idea of the stock market? Let's just say no. Let's say you've never looked at a chart before. You're looking at this screen right here and it looks like the Matrix code, or it looks like Chinese, or a language you don't understand. Well, if I said, hey, which way is the stock going to go looking at this chart? And I want you to, once you identify that, execute based on that knowledge, right? You are not going to know what to do. And you're going to try and you're going to fail miserably. Well, guys, that is why 10% or 5% or whatever of traders succeed. Because people come flooding into the market because they read this, they hear that, they see something on Twitter, and they think they can just show up and start banging on a piano and make it sound good. How ridiculous is that? Like, how silly of a concept is that if you actually think about it? But guess what? Me, Jeremy, I've been doing this for 9 years. Do you think I can look at a chart and say, hey, with some level of certainty, the stock is going to do this, or the stock is going to do that? So number one, I know how to read it. I know how to read what I'm looking at, just like a musician knows how to read music. But then number two is what? I know how to execute. I know what contracts to buy. I know good risk management parameters. I have strategies that meet specific entry criteria to really help, right, what's going on. just the same way as a musician sits down and can read music and play the piano. Okay. So one of my biggest gripes, and in my opinion, one of the most foolish things that people tell me is that trading is gambling. That is the stupidest thing I've ever heard. It is, right? Yeah, if you go into the market and you're buying and selling, you don't have a plan, that's not trading. That is gambling, right? That'd be like you saying, yeah, playing the piano when it sounds really good, it's just luck. Just luck. They're just luckily hitting the right note. It's ridiculous, right? Like no one would say that. And so I don't understand why people don't think the same way of the stock market. And it just comes down to they don't know. It's uncommon. Right? Uncommon education, that's the whole thing, right? It's uncommon knowledge that I'm trying to help you see is not uncommon. It can be common. It's not crazy. It's very simple. Okay? So that is the analogy I like to use, and one that hopefully helps you see there is a way to 1000% identify with some level of certainty and for a short period of time which way a stock price is going to go, right? Just the same way a musician knows where the music's going next by reading music. And I am going to teach you how to execute based on that knowledge. Just the same way of learning how to play notes, how to play chords that sound good based on what you're reading. Well, I'm going to show you how to buy and sell contracts and exit for profit when you learn how to read the stock price. Good analogy? How did I do? I feel like I feel like of every analogy I've ever heard of trading and how it makes sense to people, that's as good as it's going to get. If you don't understand that, I'm sorry, but hopefully it makes sense. Okay. So with that knowledge, with that being understood, here's what we're going to do tomorrow. And here's what we're going to do on Friday. Okay. And then we'll open it up for Q&A. So tomorrow, what we're going to do is we're going to be talking about this, where I'm actually going to be teaching you what these candlesticks mean. I'm going to be teaching you what this pink and blue line mean. I'm going to teach you about support and resistance, and I'm going to teach you about how to identify a trend. And that's really all we do at Uncommon Education. That is what compromises the notes and the sequence and being able to read music, right? And then it just gets more complex the more you do it, or the bigger, more, grandiose pieces you choose to play. That's how the stock market is. All we do is identify price action, which is candlesticks, okay? We want to identify where sellers have not allowed buyers to push price past before, or where buyers have said, nope, we don't want price to drop any lower, so we're going to buy again, right? We identify those areas, and then we identify a trend. And guys, trend is not hard. Looking at Microsoft here, do you think this on the day is in a downtrend or in an uptrend? Looking at this right here, not a trick question. Is it an uptrend or a downtrend? What do you think? What we're looking at right here. Yes, downtrend. Good job. You know how to identify a trend. It's not hard, right? I'm going to give you the actual, the actual genetic makeup and DNA of how to identify trends, but it's not hard. It really is quite simple. I'm going to teach you a strategy that we use here at UET, right? Everyone who's on this for free, no catch. I'm going to teach you a strategy of how to actually identify whether stock is going to continue a certain direction or not. And I'm going to break down that entry criteria for you tomorrow, which is going to be very, very, very exciting. Tomorrow's going to be fun. And Friday's going to be even more fun, because on Friday, after we learn all this tomorrow, we're going to actually implement these things in the stock market, and you'll be able to see me implement it with real time, or in real time with real money, win or lose. You'll see it happen, and the validity of it. So, is day trading hard? Yes. Is day trading simple? Yes. Okay. This is my favorite analogy in how hard or easy day trading is. The process of losing weight is so simple. Be in a calorie deficit. Right? Like, there's no way around it. You want to lose weight? Be in a calorie deficit. It's as simple as that. You can try to do whatever you want, whatever program, this, that, Jenny Craig, keto, vegan, meat, carnivore, whatever. The science is, if you're in a calorie deficit, you lose weight. Correct? Okay. 1 + 1 is always going to equal 2, right? Kenneth may not like that fact, or Keith or Stefan, you may not like the fact that 1 + 1 always equals 2, but guess what? No matter how many times you chalk it up, no matter how many times you do it, 1 + 1 is going to equal 2, right? No matter what, right? And so the point being, very simple to lose weight. But is it easy to be in a calorie deficit? No, right? It's so hard. It's so hard, right? Being in a calorie deficit, there could not be a more simple truth to losing weight. Yes, being a calorie deficit. It's simple. It's just one truth. But it is so hard to be in a calorie deficit. So guess what? Trading. Is it hard or is it complex, difficult? No. When you learn the strategies that we teach, if you go through any of our programs like our Mastermind coming up, guess what? It is so simple what we teach. But is it easy? No. Right? Just like losing weight is very simple but not easy, day trading is super, super simple but very difficult. Now, why is it difficult? Because we're human, and humans are lame. We are. We're greedy. We're impatient. We're impulsive. We have hesitation. We have all these things, right? So that's where someone like me comes in, right? That's where someone like me comes in. It's funny, our Mastermind program, I don't pretend to like know things that no one else knows or have any, secret sauce that no one else has. I think we have some things that no one else really talks about and teaches, which is cool. But I help you identify your natural strengths and weaknesses as a trader. And that's really what comes down to it. Because Mel might be incredibly hesitant, right? Analysis paralysis, overthinker, kind of gun shy, right? Scared to enter trades. Where Toma might be super impulsive, treats the stock market like a casino, no risk management, right? Just kind of fly by the seat of his pants, whatever, right? And so you can see how one person's training is going to be different from the other person's. So to think that it's just this one size fits all, it's just not the case, right? Trading is very, very simple, but it's not easy. And I want to make sure that you guys understand that, right? There's a reason why people get sauced in the market. And when I say sauced, I mean getting their face kicked in, right? They just they lose their shorts, right? They have a hard time. And it's because what we're asking them to do is say, hey, go sit down, play a piano piece, right, on the grand piano in front of a stage, Philharmonic Orchestra, right? All these, prestige guests, thousands of people, and you've never learned chord or note progression or how to read music, you're going to fail. And so when your buddy's like, yeah, I tried day trading, dude, it's such a scam. No proper training, no idea of what it even is, no risk management, no strategy, no technical analysis. It's like, yeah, no wonder you got hosed. No wonder you think it's a scam, right? It's like, good heavens. And I'm going to try not to swear on this call, but like, good heavens for like, do you really think you're that special that you're just some savant that's just going to come in and Rain Man the stock market? Like, no, right? You have to learn it. It takes time. You have to actually understand the genetic makeup of what an option contract is, the difference between futures and stock equity, right? You have to understand what technical analysis even means, right? You have to have good risk management in place. You have to have a trading system, a style, all these types of things. So that's where we come in at Uncommon Education Trading, right? So want to make sure you guys have an opportunity for Q&A tomorrow. That's what we're going to be going over. It's going to be awesome. It's all going to start to click tomorrow. Everything that we do in the stock market and in our training is brick by brick, right? Line upon line, right? You're learning a little, you're learning a little, you're learning a little, and then we take 3 or 4 bricks of knowledge and kind of combine them. Boom, you have a strategy. 3 or 4 bricks of understanding of options, futures, equity. You combine them. Boom, you have which you want to trade. So it very much is the more you learn, the more it becomes easier to say, okay, or easier to understand. So today we accomplished what we needed to. You know what the stock market is. You know the difference between stock equity, shares, futures, and options. You know that you can make money whether stock goes up or down now, which is crazy. You now know that stock market and reading charts and technical analysis and actually day trading is not gambling. It's just a matter of having a good system, understanding how to read the charts just like a musician reads music, and then knowing how to implement or execute those things, right? We're operators, we're not investors. And tomorrow we're going to talk about what all this means and how to identify these things. Okay, so we're going to go through rapid fire. Again, I would love to spend so much time on all these calls, but we're going to be very prompt. If you have questions, start throwing them in. I'm going to start answering them. We're going to go through very quick. Side note, if it's something that we're going to address, I'm going to tell you that we're going to address it later. Don't be offended. Don't feel bad. We're just trying to get through this quick, okay? Where does my money go when I lose? So just like in anything, right? If you sell as an example, let's say if you sell a call contract for a loss, someone else is buying that call contract, hoping the price is going to go up, right? So someone on the other side is making money if you lose money, right? Now it may not be someone, it might be a hedge fund or conglomerate or big money, but someone else is on the other side, getting in and out of these. When you make money, someone else loses. When you lose money, someone else is making money, or some other firm or brokerage or individual, group trading. I know your next question is, well, does that mean is there ever a time where there's not enough people buying and selling? No, not with the stocks that we trade. You could be trading with $1 million position sizes and you would never even, it would be fine, right? Because there's so much money being traded, literally billions and billions of dollars being traded every single day. Okay. Let's see. Let's say I start off with $500. How would the reward risk ratio work without buying an option contract and day trading? The price of the contract to throw off the ration. Very complex question. Let me answer it very quickly. If you trade with $500, we teach, and again, there's a lot around it. You don't want to enter a trade with more than 10% of your account. So you would need to find option contracts that cost 50 cents or less, or sorry, $50 or less, right? It's 50 cents times 100. We'll talk about that later. But are there contracts that you can buy for $50? Absolutely. And again, we don't risk that whole $50 with our systems. We're risking 10 to 15% of that $50 for the hope of getting 30, 40, or 50% of that $50. Okay. So again, very small amount. That's how that works. There's a lot more involved with that, but that's my short answer. Is Robinhood Legend a good program? No. I hate Robinhood. There's so many bad things with Robinhood. It's not worth anything. Thinkorswim's the best. Interactive brokers if you're outside the US. Taxes, very simple. I am not a CPA. Alarm, big banner. I am not a CPA. I don't give tax advice, but it's so simple. They send you a report at the end of the year. You slap it on your tax return. Very simple. Short-term capital gains. The most you can get taxed is 30% here in Utah, and that's if you profit more than $400,000 in a year. Hate to break it to you guys, you're not going to be worried about that for a while, right? Most of you. So most people fall in a normal tax bracket, 8 to 15%. Very, very normal. And quite frankly, when you're making $400,000, clicking a few buttons on a keyboard, sure, take 30%, dude, whatever. I'm making money sitting in my pajamas trading for 15 minutes. Having dabbled in futures before gold, whatever, how do options compare to futures? Are we looking for the same signals, fair value gap, confirmations, or are we approaching from a different angle, thought space? Tom, I know what you're talking about. We are trading based on technical analysis. I don't trade fair value gaps. I think fair value gaps, big part of the ICT program, TGAR, right? That whole deal. For me, we trade based off of, again, the 4 things that we just talked about earlier. Price action, okay, which is candles. Key levels, we trade 4 key levels every day. Very, very simple. We trade based off trend, and then volume, right? Volume is another big piece that we use. So there are systems similar to what you're describing, not what you're describing though, and options are very similar to that. Is this like poker? No. Will you address stop loss? Yes. Are there certain studies or indicators we should have loaded to our thinker or recommended sets? We'll talk about that tomorrow. Are there day traders that you look up to that are on social media? There's a lot that I don't like. There's a lot that I don't like. A few that I do like. And if you want their information, feel free to reach out, let me know. But majority are bad. What was your biggest loss on a trade, and how did you overcome that loss? I lost. It was about $60,000 over 4 years. I've now had weeks where I've made that. So just like anything, right? Like when I was going through it, I lost 60,000. You think everyone's like, "Oh, Jeremy, how's that day trading thing going on?" Or "Yeah, nice job, dude. You're killing it." Was it worth it? Yes. Did I have any guarantee that it was going to be worth it? No. But that's kind of the beauty of life. Nothing's guaranteed, right? You just got to keep pushing. You got to keep trying. Don't give up. Don't be a quitter. Don't be one of those losers out there who just stops doing something because someone made you feel bad or someone's like, "Oh, you shouldn't do that." It's like, okay, and what? So I should be like you, stuck in your job, not enjoying life and living how you live? No, thank you. Right? No, thank you. What's a good account size to grow to before taking money out for life living? That's a very loaded question. We go into that heavy in our mastermind program. We'll touch on that in the next couple days. Best resources for starting out, Keith, you're looking at it, my man. You're looking at it right here. I think our mastermind program is the best. And honestly, it's the last education you'll ever need to have as a day trader coming in with us, learning from us. but you're doing it. You are learning from someone who trades for a living, and that's what I always tell people. Learn from someone who does it for a living, and learn from someone who's good at teaching. Are there people out there who make more money than me? Absolutely, trading. There's people in our community who make more money than me trading. Doesn't mean they're good at teaching. That's a huge misconception, right? It's like when Tom Brady hopped in the booth as an analyst, right, for ESPN or SportsCenter, Fox, whatever. He was terrible. Greatest quarterback of all time. Horrible in the booth. Hated hearing him. He was horrible. He's practiced a lot. But again, one, they got to be good at actually trading. Two, they got to be good at teaching. And that's the hardest part. Okay. A few more questions, and then we got to wrap it up. What is your brokerage again? This is Thinkorswim by Charles Schwab. Charles Schwab is the brokerage. Thinkorswim is the platform. Can I take what I've learned on pocket options to Schwab? I don't even know what pocket options is, but I'm assuming so. Let's see. Any suggestion on a book to purchase to get more understanding? I recommend 2 books. Number 1 is Trading in the Zone by Mark Douglas. It's the only trading book you'll ever need to read. It's the only trading book I've ever read. I will not read another book. Why would I? I'm making money doing this. I've not mastered it, but I've gotten pretty dang close. And Trading in the Zone is a great book. I read it a lot. Second book, The Happiness Advantage. A lot of parallels to day trading. Someone does use Robinhood. What place is best used for charts? Trading View. But if you're using Robinhood, just put money in Thinkorswim. Charles Schwab. It's so much better. We go over volume more. It's always been the part that confused me. Yes, we'll go over that tomorrow. We need to familiar myself better with the program and how to use it to participate tomorrow, Friday. No, we will go over it all. We email a link of this meeting so we can rewatch. Yes, UET is the absolute best. Thank you, Tracy. What's the cost for Mastermind? How can I access it? Shoot us a message, Kenneth, on Instagram. We have a few different options of payment. We do financing in-house. We have a discount if you pay up front, but less than a semester of college. Man, first of all, thank you for your time. You betcha. None better than UET. Best money I've ever spent. Thank you, Leticia. A few more, and then we'll wrap it up. Is it worth closing out Robinhood accounts? I would say so. For day trading. Investing, I invest in Robinhood. It's nice to have it all there. Day trading, it's no good. Day trading is terrible. Let's see. The Uncommon Family is the most supportive group of people I've ever met and continues to want to see everyone succeed. Hell yeah, thank you. Can someone type the names of the books are Trading in the Zone and Happiness Advantage. Trading in the Zone and Happiness Advantage. I think that is it. How much from your paid monthly plan for 150? I don't really understand that question. You just answered the 150 is the monthly cost. I don't know what you mean from that. If you have questions, hit us up on Instagram. We'd love to go from there. Last 2 questions and we'll wrap it up. Sorry for being 3 minutes late. Any good day trading mobile apps? No. Why trade from your phone? Trade from a laptop, right? Again, this isn't towards you, Jerem. This is like generally speaking, people are like, oh yeah, I trade from your phone. Why would you want to? I don't understand that. You're going up against the biggest, most sophisticated, wealthiest, smartest peoples, institutions, and organizations in the world, and people want to do it from their phone? Why? Why? It makes it so much harder. You're on a tiny screen with like multiple things to press. Maybe you run out of LTE. I am a huge no fan of trading from your phone. It's just, again, it's like showing up to go play in the NBA and you're wearing football cleats. It's just like you wouldn't do it. It's like, why? You're going up against people who are like playing barefoot. It'd be literally like playing barefoot in the NBA. It'd be absolutely crazy. Best month year trading. I barely see anything on the big screen. Well, we'll help you go through all that. Imagine how hard it would be on a phone. Exactly. That's my point. Like, yeah, this is great on a computer. Imagine trying to look at this on your phone. Best month year trading. I never reveal my yearly profits for multiple reasons. Best month, though, I have never eclipsed 100,000, but I've come pretty close in a month. And I've never eclipsed 7 figures trading in a year. So I've never made $1 million trading in a year, but I've made a lot. Let's put it this way. I left my job. I had a $250,000 salary as a VP of sales at a marketing company, profit sharing, company car. The total package was something like 400,000, and I was making more than that, which is why I left. So, guys, thank you for being here. Apologize for being late. Hopefully this has been fun. Hopefully it's been entertaining. Tomorrow we're getting into the technical analysis. It's going to be incredible. We're going to figure out exactly how to do what we're talking about here. Thank you. Appreciate it. Thanks for the kind words. I try really hard. It's really hard to condense it all into an hour Q&A, all of this. Very, very difficult. But hopefully you guys learned some stuff. Can't wait for tomorrow's technical analysis and strategy portion. And then Friday, live trading should be a blast. If you guys have interest in our upcoming Mastermind program, again, this is where we help people go full-time trading, right? We have probably half a dozen people here making over 6 figures a month trading with us. Crazy. And everything in between, from stay-at-home moms making $100, $200 a day, people making 10, 20, 30,000 a month. It's very, very cool. So if you have interest in the Mastermind program, it's kind of you have to go through our process of the wait list. We have a lot of people who are interested. We have to essentially make sure it's a good fit on our end. But if you have interest, hit us up on social media, Uncommon Education Trading, or Jeremy Lieber, or the Real Trader Jeremy. All Instagram accounts by me. Look forward to seeing you guys tomorrow. Should be a lot of fun. Come with more questions tomorrow if you have. We'll be a little more prompt with our time. Again, I feel bad going 7 minutes over, but we're going to wrap it up and shut it down here. We will send this out. You will get our AI little analysis notes sent out to you as well, and I'll plan on seeing you guys tomorrow, 6 p.m. Mountain Standard Time. Thanks so much, guys. We'll plan on seeing you tomorrow. Appreciate it. Have a good rest of your night. Later.